Good afternoon, everyone, and welcome to today's training session. My name is Ndumiso, and I'll be taking you through the General Ledger module this afternoon. Just a quick one before I start. Can I just confirm that everyone can hear me? You can type it in the chat. Excellent. Thank you. Right. Excellent. I'll just get started. So main focus at this point in time is going to be the General Ledger module. Please reserve any questions for the end of the session today, and then I'll answer all questions pertaining to the module at a later stage. For now, if you can just allow me to go through it, and then we'll address the questions later on. So we'll start with the maintenance section within the General Ledger module. Basically, this is all, it's got to do with configuration of certain aspects of the General Ledger module, be it your chart of accounts, if you want to add a new account, if you want to delete an account, if you want to edit an existing account, this is where you do it, under your maintenance section within your accounts. So I'll just quickly go into the accounts. And it basically looks something like this. It gives you a list of all your existing accounts within your chart of accounts. And then basically you have multiple filters that you can use here. So if you want to have a look at assets only, for instance, it's just going to give you a list of all your assets, and you can apply an additional filter to drill it down further. Let's say I want to see just my fixed assets, and then it's going to give me another drill down that just gives me my fixed assets specifically. I'll go ahead and remove filters now. Then we can have a look at creating a new account. So in terms of user interface, within Palladium, it's pretty much standard. Every window or any processing window you're going to find in terms of master files, it's going to give you a new, it's going to give you an edit, you can delete. Then obviously there's going to be some unique features within each, but mainly pertaining to search parameters and some filters. Other than that, it's just new, edit, and delete. So to create a new account, it's simple. You just go click on new. Then the important step to keep in mind here is Palladium works on a segmented basis when it comes to your account setup. So by that, it means you have to set up 2 segments, which you then build to put together to form an account. So every time you need to create an account, you just need to keep in mind that in order to be able to build and come up with an actual account, you need segment 1, which is your main account number, segment 2, which is going to be your department, be it your sub account, be it your branch, whatever you want to label it. And then you take those 2, main account and department in this case, and you put them together to form an account. So if I go add new account segment to create my main account number, and then you'll have a space or a field here where you are able to add another account or another segment. So it says here, add new account segment here. And then that's where you're going to start configuring or adding your new account segment. In this case, I'll create a revenue account. So my legend says my revenue is within 4,000 to 4,999. So I must just keep in mind my legend. If I want to filter it down to see the type of accounts that I already have or account numbers that are already existing within that particular range, just to ensure that I don't duplicate it, I can just add my account type. I've put it in on revenue, and then it's going to give me everything that is revenue at this point in time within my chart of accounts. So I'll go and say there's no 4,500. So that's what I'm adding, 4,500. I'll call it rent income. I'll go and add an account type, an account class. It's other revenue. I'll just make it a full account. So I have my first segment. Now I need to go create my second segment, which is my department. In this case, there's already some second segments or departments created on here. As you can see, there's one for operations, general expenses, and finance. So I'll just keep it at this. And then what I need to do now is put these two segments together. So you go build. So after you've added your account segments, you just go build. Then you search for your account, rent income, operations. So you double click on each of the segments that you're trying to put together. What you notice is it generates an account number and a description together with the linking of the two segments together. As soon as you click OK, it brings it up to this processing screen, basically acknowledging that you've created a new account. And then in terms of the description, you can edit it here. If you want to make any changes to that particular description, you can make those changes on this description line. However, you can't change your numbers because that's what the segment is. So you can't edit the account number. And then you get departments in terms of the different tabs that you see up here. So with departments is basically allowing this particular account into a certain department where you say this particular account is only allowed in my sample department 1, for instance. So that's where you'd configure and specifically say that with all the departments that I have within my organization, I am specifically saying that this rental income account is only allowed in sample department 1. And then if it's a bank account or a cash account, you need to mark it for reconciliation purposes. If you want to do a bank recon on it, then this is where you do it. Take note, it's only something you activate if it's a cash account or a bank account. You can set budgets for this particular account. In this instance, it's rental income. So if you want to budget expected revenue, you just budget this account and then you'll put in an annual figure, say of 1,500,000. Then you can click on allocate to periods. Then it's going to split it into the months of the financial year to actually show you what the target is in terms of your monthly revenue that you need to generate to make the target of 1.5 million per annum. And then you can also enable security on your chart of accounts or specific accounts. So what security does is it gives certain users access and denies other users that are not allowed access into this particular account the ability to post in that particular account. So stuff like journals, any invoicing, if this is going to be a linked account, for instance, for any of your major processing elements on Palladium, like your sales invoices, for instance. If you make it a linked account, then any processing that is linked to that particular linked account, the user will not be able to run that processing if they're not allowed access into this particular account. Then you get optional fields, which is basically just user-defined fields, where you can store any additional information that you deem necessary for that particular GL account. That's what you'd use in terms of adding that additional info. Files, it's sort of like a file cabinet where you can store any materials that you deem necessary in terms of documents pertaining to this particular rent income account. Once you're happy with all configurations, you can just click OK. And then you've created your rent income account. The next thing we're going to have a look at is departments. So departments is pretty straightforward. There's not a lot to see here, basically. But to create a new one, just click on new. You give it a number, say 4,000. You'll give it a description. And then you'll specify which accounts are allowed into that particular department. In this instance, it gives you a list of all the accounts within your chart of accounts. And then you're going to specify which accounts are allowed in that department and which accounts are not allowed in that particular department. Obviously, anything that's not allowed, you're going to omit in terms of selecting it here. In terms of budgets, you can do departmental budgets, but that's something that's done in the control panel. Obviously, will be covered when the control panel is part of the training session. So that's how simple it is to create a department, and there's nothing fancy about it. It's as straightforward as that. Next thing you get is account sets. So with account sets, it basically allows you to link your inventory items to your chart of accounts. So with account sets, it's when you create an inventory item, you obviously have to link it to a control account. You need to link it to a cost of sales account. You need to link it to a revenue account, and you need to link it to a variance account. For instance, in instances where you ordered an item at 5 Rand and then you ended up buying it at 10 Rand. So that variance has to go somewhere. So that variance account is also critical in terms of linking it to your inventory item. So the account set is that particular bridge that you basically create to ensure that your chart of account is communicating with your inventory item for processing purposes. To create an account set, again, I did stress earlier that the user interface when it comes to your master file configuration is pretty standard. You get your new, edit, and delete. So again, to create a new account set, you just go new, you'll give it a code, and then that particular code will obviously be anything you want it to be in that instance. So sometimes you get clients that create multiple account sets based on the different category of inventory items they're selling at that point in time. Simple example is if you're a retailer, and you are creating multiple account sets for reporting purposes, where you want to report on all your cold drinks separately, you want to report on all your snacks separately, you want to report in meats, for instance, bakery stuff, where it's going to be bread, it's going to be your buns, it's going to be your cakes, etc. So you can create multiple account sets to ensure that all the revenue pertaining to cold drink will only go to cold drinks. All the revenue pertaining to meat will only go into the meat account. All the revenue pertaining to dairy products will go specifically into the dairy products account. So that's essentially what the account sets is designed to help you configure and to have control over. So to create a new one, you just go new, give it a code, a description, and then you get your linked accounts. So with your linked accounts, it's a simple matter of clicking on binoculars, and you select the relevant accounts as you create or configure your account set. You can also have one for service items, and obviously for your buyout items. And that is account sets in a nutshell. Then you get journal codes. So with journal codes, it basically allows you to generate a sales invoice or a purchase invoice and have a line item for a GL account specifically on that particular invoice. So if you want to do a sales invoice into the rent income account specifically, you need not create a rental income service item for you to be able to invoice on rental income. You can just generate a journal code, and how you do that is you just click on code builder, and then you select the rent income account. As soon as you click OK, it generates a journal code for you, where it basically goes and it has the linked account, and it gives it a name and a code for you pertaining to that particular in GL account. Okay. Then if you go into your sales invoice, I'll just go with any customer. I'll include journals, go my rent, and I'll be able to add my GL account as a line item on my invoice. So that is basically the purpose of the journal codes. So without a journal code, you won't be able to see that particular GL account on your sales invoices or your purchase invoices or whatever processing document it is that you're trying to use that's outside of the general ledger module. Contract management. So with contract management, there's no real processing implications on this. All you do with this particular functionality is it allows you to create contracts and keep track of them on the system for you. But it's got no processing implications. It's just for you to have all your different contracts that you engage in terms of your business operations. And then it allows you to see them all on one screen. You track your start date to your end date, and you'll have the contract amount on this particular screen as well. So in terms of configuration, as you can see, it's quite self-explanatory. All you do here is you create your contract type, where it's a free text area. In this instance, it's a tender. So once you've added that particular field, you can click on the drop-down arrow, you select, specify the contract number as per your contract, and then you'll have a description for that particular contract. Specify the contact person, and then you link it to an expense account for any expenses incurred on behalf of this particular contract. Then you'll specify your from date and your end date and the amount. And then it's just a matter of saving it, and you'll be able to keep track of that particular contract from here. The next thing we're going to be looking at is the processing side of your general ledger module, which consists of your journals, the ability to do bank transfers, deposit slips, bank recons, and the accounts open items allocations. So with your journal entry, it's a standard journal where you basically do whatever processing you need to do in terms of your GL accounts. So be it correcting balances, be it bringing in opening balances, be it correcting any errors on any of your GL account balances, etc., whatever the case may be. In some instances, you might even run depreciation using the journal entry function. So it's totally up to you. So it's basically an accounting function, and it caters for all of those different needs. Just to quickly explain what the navigating tools are on top here, you get your new, so for a new document. Open is to open any journals that you'd processed prior to this particular journal that you're about to process now. So if you want to go and review or open up an old journal that you processed, be it a week ago, a month ago, 2 years ago, whatever the case may be, as you can see, you've got your start and end date to specify the date parameter of that journal that you're looking for at that point in time. And then you'll select that journal, and then obviously it opens it up for you like this to see the previous journal. And then new just takes you back to that blank screen where you can start creating your new journal. These navigating arrows, we're on journal entry number 6 now. It's the next available document number in terms of journals. If I go back, it's going to give me my previous document. I go back again, it goes back to the previous document. So basically it allows you to move between journals without having to go open to search for that particular journal entry that you're looking for. Then you get your adjust. So adjust is if you notice that you processed the journal, but you made an error in terms of your amount, for instance. So you can click on adjust, and it allows you to configure your debits and credits. Maybe you switch them around, or you put in the incorrect amount for any of your line items. You can make changes to that, and then you can just record it again, and it does the correcting entry for you in terms of your ledger reports. Then we get a save and recall function. So a save and recall function basically allows you to, in instances where you have recurring journals, Perfect example for this would be monthly depreciation. You can set up your journal once off in terms of your depreciation expenses. And then in such a case, let's say maybe you go and you create a depreciation expense. So let's go in. Depreciation, air conditioners. We'll debit that 500. And then we'll have a credit. My accumulated depreciation, air conditioners, the credit of 500. So I know that this is a monthly journal that I run on a monthly basis for my air conditioners. So what I can do is I can save this journal and run it every month again when I need it by just using the recall function. So it keeps the structure of the journal as a template, and obviously it gives you the ability to change your amounts if you need to change your amounts. So in this case, I'll just verify all, and then I'll record it. So it saves my journal. Then what you do is you go click on save, just go depreciation, air conditioners, then you'll save that. In the following month, when you need to run the same journal again, because it's a recurring journal, just go record, you select that journal, and it brings it up exactly as you processed it the first time of asking and when you saved it. So it brings up the exact same template. Obviously, you have the ability to change your amounts if you need to change amounts. You can still add some more stuff, but obviously you'll need to save it again. But basically, you've got the general structure of what the journal should look like. That's how your save and recall function would work. And in terms of document info, so if you want to change stuff like dates, for instance, on this particular journal entry, you can just go to doc info, can change your comment without having to adjust the entire document. You can mark the journal for reversing if you want to be able to reverse it. Then you can save that, and then it updates certain pieces of information for you without you having to adjust the whole document just to change the comment on that particular journal entry. So it makes it a lot easier for you to manage that type of functionality. Then you get centers. This is for allocation purposes. If you want to allocate to profit centers. So if you've got profit centers configured and you want to allocate whatever you do in terms of processing to your profit centers, it allows you to do that allocation using that function there. And then similarly, if you want to allocate these expenses to your projects, if you've got projects running on the system and you want to allocate this particular journal entry to your projects for whatever reason, then you can do that allocation into that projects module. Attach files. If there's anything you need to attach onto this particular journal, maybe it's the depreciation schedule to prove that this particular entry belongs to something that does exist. Then you can just do an attach files and you can attach the depreciation schedule there. Revaluation. It's a function you use if you've got foreign currency or you're using multi-currencies on your system. So basically it's to revalue basically your closing balance at that point in time. So if your balance was valued at a closing rate of 15 Rand to the dollar, for instance, then you can revalue it if need be for reporting purposes to a 14 Rand 50 on the following day, for example. Then you can just run a revaluation. And then basically on that revaluation, it takes you to the screen where you'll select that you're revaluing your bank account, for instance. Then you'll select that particular bank account. Then you'll specify what the revaluation amount is in terms of your calculated rate. And then it's going to process a correcting journal that's going to increase or decrease your closing balance pertaining to the new rates of exchange at that point in time. In process reversing, if you recall correctly, I did a doc info adjustment and I marked my depreciation journal for reversing purposes. So in terms of this function here, it basically says, or it's given you the ability to be able to reverse journals without having to go and adjust and do opposites of what the initial entry was. So Palladium has introduced a function that basically does that for you, provided you'd mark the journal for reversing when you processed it. So in that instance, you can just say I'm reversing that journal. Then as you can see, my depreciation expense account is now in the credit and my accumulated depreciation is now debit, which basically means I'm reversing this particular journal entry. And then the preview financials function, what it does is it shows you what effect it's going to have, this particular journal entry, what effect it's going to have on your financials in terms of your balance sheet, income statement, and your trial balance. So it shows you what the current balance is, and it's going to show you what the net effect of this journal is going to be on your different accounts in terms of balances before you even record it. So preview financials for my income statement, for instance, I'll be able to see what effect this depreciation entry is going to have on my depreciation expense account before I even record this transaction. So there's my depreciation, there's my journal, and then that's the effect it's going to have after my journal entry. So you can run the same function for your balance sheet as well, where you'll see your accumulated depreciation, and also for my trial balance. So that's a function to show you what effect a specific entry is going to have on your income statement, balance sheet, and TB before you even record that transaction. And then the print preview that allows you to print that journal entry you just processed. View journal entry. It's basically going to show you the journal entry that you just processed. It's a simple function that just shows you how it went through. And this is basically going to be the printout when you decide to print this journal. And this function here basically shows you the user who entered this particular document, gives you the date and the time. And that is basically your journal entry. And then one other thing about our journal entry function is that you can write a journal specifically into your AP module and your AR modules. So the key thing about this is that it allows you to write off an outstanding balance to a particular customer if they become insolvent, for instance, as a typical example, and you want to write off whatever they're owing you to a bad debt or as bad debts. So in this case, they're owing us 770.94, I think, if I'm not mistaken. So one thing that's critical about your AR and AP module journal processing is that GL contra accounts are mandatory. So at all times when you're processing into AR or AP, you need to use the GL contra account function that's here. Without it, the journal is not going to work. So basically, in this case, I don't need 2 lines. I can just say bad debts, and then that's my journal, and it's complete. It's going to post this as a credit into my customer control account and also add it to Brown's account specifically. And then it's going to post a debit into my bad debts account. So if I verify this and I record it, you'll see the journal it processes. It just gives me a debit into bad debts and a credit into my accounts receivable. And it works exactly the same for your accounts payable module. And the next thing is your receipt and payment. So with receipt and payment journals, it's the exact same as your journal entry in terms of the navigating tools on top here. Only difference with this one is you need to specify a bank account that you're processing in at that point in time. So I'd like to think of this particular journal as one that you bring in all your statement transactions. So your bank statement transactions, as long as it's not a receipt from a customer or a payment to a supplier, it's any other type of expenses that you incur during the month, like your bad debts, payments for some items for the office, like your coffees, like your milk, like your sugars, etc. Those type of expenses that you obviously want to account for within your system in terms of your business account. This is the particular function that you use for that. So you get your payments tab and your receipts tab. So with your payments, it's also just straightforward processing. You go cleaning. We incurred an expense for cleaning purposes, $550, then that's the expense that you paid for. And obviously, this is going to be one of the entries, and then the contra is always going to be your bank account. So that's your receipt and payment journal. Then you get your bank transfer. So with bank transfer, it's basically saying I'm moving some cash from my current or check account and I'm depositing it into my petty cash account. So I want to transfer 1,500 into my petty cash account. And as soon as you record it, it just processes a journal for you where it debits one and credits the other. As opposed to you having to go do the manual transaction yourself using the journal entry function, it does all of it for you. Debits the one and credits the other. Then you get your deposit slips. So with a deposit slip is a key tool for businesses that run mainly on cash. So if you always have cash on site, this is a handy tool for instances where you need to go and deposit that cash into your bank account. So in such instances, what happens is you'll generate a deposit slip where you say, this is my cash for the day or my cash for the week. And now we are depositing it into our bank account. So the account you're depositing into is the current or check account. And maybe it'll be coming from your cash to be deposited account, for instance. So maybe this will be the actual account that's linked to your point of sale, for instance, where all the cash that you generate on a daily basis is going or is being posted specifically into your cash to be deposited account. And as you store it in your safe within your office, it'll be parked in this particular account for that particular period. Then obviously at the end of the day or the end of the week, you'll specify how much you're depositing, be it 15,000 from this particular account. And then the next thing you do, you need to specify the deposit breakdown. It can be a check. In this case, we're talking specifically cash. So you have to specify the count in terms of the denomination of what the actual notes of cash you have or coins or whatever the case may be in terms of your count. So if you counted 10, 20 Rand notes, that's 200 Rand, and you'll have some 50 Rand notes. So maybe we'll say 20 of these, that's 1,000. And then maybe you had 50 of that, that's 5,000. So we need 6,200. So we'll say 130. Oh, that's a bit too much. Now it's too little again, but you get the idea. So basically, you'll specify your count and and then you'll have the amount that tallies up and forms your deposit slip, and then you'll basically have that. Okay. And the next thing would be your reconciliation. So this is your bank recon. Then with your bank reconciliation, obviously it's important to keep in mind that you need to mark your specific accounts that you want to reconcile for reconciliation purposes. And then once you've marked those particular accounts, once you click on the binoculars here, you'll be able to see all those accounts that you marked here. In this instance, we want to reconcile our current or check account. And then on here, what you do now is you specify your statement start and your statement end. If you want to do it for the month of Feb, that's your reconciliation date. You'll obviously have your opening balance and your closing statement balance for this particular period. And then it'll give you a list of all the transactions relating to this particular specific date range that you've got there. Then what you do is you just reconcile. It's a matter of matching the transactions on your statement to what the transactions are on here. Then you just clear them if you're happy with all of them. And that's how you basically do your reconciliation. And obviously you can have a comment, you can save it to come back to it at a later stage. Alternatively, once you've cleared everything and you're happy with all of that, you can just record it. In instances where maybe you marked your account for reconciliation purposes later or after you've started transacting on that particular account, then when you come into this function and you don't see certain transactions, what you can do is you can go to add prior outstanding. You go from GL and it's going to give you all the transactions that were missed in terms of when you marked it for reconciliation purposes. Then you'll be able to see them all on here. You can add them and you can use them for reconciliation purposes as well. And that is basically your reconciliation functionality. Then your account open item allocations function. What it does, it basically suppresses transactions from your ledger reports. So I'd like to think of it as a tool that basically allows you to hide certain transactions or hide journal entries specifically from being reported on your ledger reports. So if you know that there's an account where you did some correcting or rounding journal specifically, maybe there were some variances in that particular ledger report because of rounding differences, and then you process some journals to actually account for all of those different rounding differences that accumulated in that particular GL account. So what you can do is you can use the account open item allocation function, which will basically suppress and hide all of those different journal entries that you processed for rounding purposes. So essentially, what you're going to see on that GL report ultimately at the end of all of these suppressions is actual transactions that took place. So if it's a revenue account, for instance, you're just going to see the actual sales, but not the rounding journals that you processed in order to correct the balance because of rounding differences, if that makes sense. So that's what this tool basically caters for. So if I select my current or check account as an example, you see something that looks like this basically. And then what you do is, if it's an unallocated credit, you just go and say allocated against the debit, which basically means that it's going to process an entry that's going to hide the credit that you processed into the current check account via the bank transfer function. Okay. So that's basically how this particular function works. You can filter for specific transactions, and obviously you can specify date parameters on here as well. Subsidiary ledger, it's basically your vintage cash book. There's not much more I can say about it because I doubt anyone uses it at this point in time. Nobody uses it, but it's basically your vintage cash book. It allows you to do your journal entries, your debits, your credits, allocate it to an account, have a description, have a comment, and then you basically process that. But I'll omit it in this instance because no one ever uses it anymore. But if you've got some questions on it and you're interested in using it, then obviously you can contact us and we'll help you have a look at it. Then the merge accounts functionality, it basically allows you to, so let's say maybe for reporting purposes, maybe you've got a subsidiary and you create an account for that subsidiary specifically, and you want to report on that new account that you created. So you'll have an existing account on your system that had been accumulating transactions pertaining to that account that you had previously. And now you created a new account and you want to report on the new account for the current year. Then what you can do is you can do a thing of merge accounts. So what merge accounts basically does is it moves transactions from one account and moves it into the new account that you're going to create. So essentially, you just go select an account, that's your from account, and then you'll have the account that you're transferring it or moving it into. As soon as you click on update, it moves everything that's in cost inventory C and puts it into freight and wharfage expense. However, it's for the current year only. So it doesn't look at previous years or it doesn't look at your historical years. It just moves whatever was processed in the current year only. So that is it in terms of what you can do in the processing side of your general ledger module. The next thing we're going to be looking at is your profit centers. So in terms of configuration, it's quite straightforward. All you do is you give it a name. So profit centers, I like to think of it as something that you can use for reporting purposes. So it accounts for your income and expenses on all your processing documents on Palladium. And if you want to create a thing of segregating your business in terms of your different departments to see each department's performance in terms of revenue, in terms of expenses, then you can create profit centers and have all transactions allocated to the relevant profit centers. It's also handy when you're setting up an organization that's got multiple branches, and then they want to report on branch level also. So the profit centers will come in handy in that instance also, where you'll create the branches as profit centers. And then in terms of allocating transactions to all these different branches, then you'll be able to do that particular type of allocation on the processing screen. So there's already centers that are pre-configured here. So there's nothing much you do here except link accounts to the profit center. So if I go check all, I'm basically allowing all of these accounts into my center one, and I'll do the same for center two. So you can also add sub-centers within a center. So if there are departments that the branch wants to report on within a branch, so you want to break it down into departments within a branch, and that's also something that you can do by simply adding your sub-centers. So within center one, there's going to be there's going to be department 1, 2, and 3, for instance, and you can split it up in that way in terms of transactional allocations as well on your processing side. And then you get something called profit center templates. So this comes in handy where an organization wants to control the type of allocations that take place when you're processing. So if maybe only the financial manager within an organization is authorized to specify the type of allocations that must take place within each branch, or the different splits in terms of how the allocation must take place. So the financial manager would sit down and do templates. So maybe for branch one, there'll be a template for branch one, for example. And then in terms of centers, they'll say it belongs to this center, 50%, and the other center, 50%, in terms of the allocation split, for example. Then how this would then work is it eliminates the room for an actual user to have the ability to dictate what gets allocated where. So it's a thing of saying use template, select branch one, click OK, then it automatically does the allocation based on what the parameters were on there. So because the branch one template specifically says 50-50 split, that's what the system will do exactly based on that selection of your center. Okay. Then you get your ledger reports here, where you get your financials. It's your balance sheet, income statement, trial balance, periodic movement report. And then you get some for transactions. It's your general ledgers, cash book, VAT reports, etc. You can also run budget reports, which actually compares your actual figures versus any of your budgeted amounts. You can run reports by department. Then you get your lists at the bottom there. Then you get specific center reports, which in this instance would be your different branches. So reporting by branch. Then you get a list of just your ledger transactions and also your journal entries. So that is the general ledger module. We're just going to take a quick 5-minute break. I'll be handing over to JP. I've just got a meeting that I need to attend now. So JP will be taking over from here to do the business module. So he'll take you through that. But after the break, I won't be around. Thank you for your question, Elaine. This sounds more like a support query. So if you don't mind, if you can just send your specific query to support@palladium.co.za, and then we'll assist you in terms of your particular query. Thanks, Donovan, for providing the email address. So that's the email address you can just forward your query to. And then one of the support consultants will have a look at this particular query for you. It's a pleasure. Okay, so that's it from me for now. JP will be joining you in the next 5 minutes.
Hi everybody. Sorry about this, but Indomiso just went in. He currently got busy, so I'm just going to be taking over quickly just to finish up your business training. My name is JP Duarte. Can everybody hear me clearly? If everybody can just put in chat if anybody can hear me. Okay, cool. I guess you guys can. So apologies on Indonesia, he just had to run out. But yes, I'm just going to quickly finish up the training when it comes to the business module, just the quick bank manager and cash book. It won't take too long. So apologies on the wait and waiting to finish this up. Okay. Now let's just check. Can everybody see my screen currently? If you guys can just put in chat, you can see my screen. Okay, perfect. Okay, so the bank manager or the business module is supposed to represent on how, well, money going into certain accounts. So if invoices are done and they need receipts to be allocated to those invoices, the bank manager is here to do many of them at the same time. So if you have multiple clients or customers call in and they transfer you a set amount of money, then import or export the amounts, put them into your bank manager, and then they will be allocated to either a receipt or a deposit. Okay, so what we can do is project casting. There's no need for the project and job casting. This is for customers and anything that is this is for more if you have a specific customer that has a set amount of accounts, or not a set amount of accounts that is coming in very often, or it comes in quite a bit. This is a project for the customer. Okay, but I won't be going through this as of yet. We're going to be going through the bank manager and cash book. Okay. So to start off with the bank manager opens up and everything is quite simple. Here's where you can import, create new ones, or open up old imports. So we have our ID, the date, the transaction type, account types, account name, and so on. Yeah, there's really not much to do with business intelligence. So we can either create or open. So this is old bank manager imports, or old imports or statements that have been done beforehand. You can then open and refer back to them. Here is the import function. The import function is being able to import set amount of transactions into the business module. So as you can see here, that when you choose the bank, you have a set varieties of banks as well as specific files such as OFC or OFCX. These are the two most common files to use. And once you choose one of them, you can then click on OK, and then you can search for that said transaction. Oh, sorry, that said file. Yeah. From there, that will then import and you'll have all your transactions as I'm going to show you now. So then we have our, at the bottom here, we have our dates, our document, and our bank we're going to be transacting to. So this is a set default bank. So mine is 1060 for my current and check account. If I come here, then I can change that account depending if necessary. Okay. Okay. Now from the bank manager looks for the customer and looks for the invoice that has the same amount. So if an invoice has been done for that customer, then the amount that is shown here in your business module, in your bank manager, is what's going to be taken off on that side. So you're just allocating the receipt to the invoice. This can all be done manually as well, but for large purposes, the bank manager is best. Okay, so if you're not importing, then you can then do it manually. We can then have a transaction type, either it's a payment or if it's a receipt. We can then have the account types, customer, vendor, bank transfer, or general ledger. From here, this can then change because if it's a customer, basically, then we have the money coming in. So we can then click on customer. We can then find the account that the customer we're trying to allocate the receipt to. And then you can see it shows that there's a reference, what type of bank manager it was. Now, this is the second bank manager I'll be doing. The value for said account, so let's say 50 Rand, for example, and the tax for said account. Let's make it it doesn't seem to change. It's fine. Okay, I'll have to check that quickly. Okay. Then let's do a payment. Do a payment to a vendor. Okay, apologies on the names because my vendors and my customers both have the same names, but we'll just use maybe this one for example. Okay. Okay, and as you can see, because it's a payment, it's going to be minusing 50 from the account, and the receipt would obviously then put in 50 into the account. From here, you can check if there's any type of exchange rates. If you have exchange rates, there would be an exchange rate option over here at the bottom, as well as an exchange rate option here on the top. But this is only if you use foreign amounts or foreign accounts. Okay, we can add a comment. So this can just be a text. Okay. The information that's displayed here at the bottom is just anything that is representative to the invoice or to the receipt. So you can see there's a deposit of 50 and there's an amount of 50. So you can either match it or you can unmatch it or auto match. This just represents, so if you have 50 here, it will allocate it to all the customers that have a 50 on their invoice, for example. Same goes for any type of deposits or payments. Okay, from here, we can click on record. So as you can see that I don't have an invoice that is the value or receipt that is the value of line 1, which is 50. So it won't match to another allocated receipt. So I'll just apply the balance to the deposits. Okay. And it says here that the import has been updated successfully. We can then click OK. And then, yeah, from here, we can minimize that and open up our cash book. Now here, if you open up our cash book in our bank manager, apologies on that. Okay, so if we open up our cash book, we can then open up an account that any of these are associated with. So we can see that both of these transactions were done on the bank 1020, which is our cash to be deposited. And we can open up our cash to be deposited. And then if you open up, you can see that there is a deposit and a withdrawal of these two accounts. And then you can see that it's already allocated a receipt. So this is receipt number 3 for said client. Okay, and goes for same for the payment. This is the first payment that we have done on this database to withdraw 50. Okay. The cash book is more for info displayed situations, where in the cash book you can also do your receipts, your payments, your pay tax, transfer, deposits, and reconciliation. All of these can be done manually in your other modules. As you can see, we can see here on the general ledger, we have our reconciliation as well as it over here as well. Okay. For this account, I don't have my reconciliation activated, so we'll just have to find one that is. Apologies on this. So the 1060, okay. Okay. So as you can see, you can now go into reconciliation because this is where this is done. So here is one of my receipts that I've done. And if I would like to do a recon on said receipt, I can then clear it up and record it from here instead of going all the way to my accounts payable. So this could be, so you could have maybe two people, one person that is working on all the purchase orders, invoices, and the sales orders and invoices. And you will need one person or another person to do journal entries and recons. So you can have the one person do all the receipts when you have another doing the recons. This could be for security purposes or if you have admin that needs to do these things. Okay, we can then click on record. Okay, I need to. Sorry. Yes, because of these. Okay, so unfortunately, because of my opening balance, this won't allow me to record it. Okay. Can then move on to deposits, and if there's deposits for this account, or if there's any deposits for this account, it is then done here. We can open up and see if we can maybe find that other one that we did. Okay. Okay, so there's no deposits that were done or any transfers. So deposits, we can then do a deposit here by adding an account. Okay, and this is then going to be doing a deposit from one account to the other account. You can maybe put 500, for example. Let's hope that there is that much. 25 just in case. Apologies on that. So we just had to allocate the amounts to make sure that we are depositing from one account to the other one. Okay, so this can show that the amount is 25. We're using 15 and 220s. This is all depending on the company itself. Okay. The transfer is quite similar to the same as deposits, but instead of using a cash deposit, you'll be using a normal transfer. So this is also used for any type of foreign exchange or foreign amount exchange. So if you have a foreign account that needs to go from one foreign account to a local account, this is where you would do so as well. So click on another account here. And finally, I don't have my exchange rates active. So then this is going to be grayed out for me. Then that will obviously just do a quick deposit from one account to the other, quick transfer. We also have pay tax. This all depends on company. So this will be allocated to a tax authority, the amount that's used, and the account that the tax is being taken off of. So usually there is a tax account that you can link up to this or to the bank account. But this is all based off the company that you're working for, or the company of yours. Okay, so you can see here, these are all my purchase invoices and invoices that have tax on it, that is allocated or not. And you can record. Okay, so now that's it's going showing a payment amount. So this is all your sales tax or your purchases tax. And this is if you would like to allocate those set amounts to that. So from here, you can click on record, and this will then allocate anything that is here as well. Move on to payments. Payments is quite simple. We would choose a vendor. We then see here is our first invoice, and this is our payment that we did on the bank manager. We can have a set amount. Okay. And then we can allocate said payments to the amounts. Here we go, and here we go. Okay, and then you can then click on record for the payments. And now these two are basically allocating the same is for the first invoice. For 30 Rand of 226,000 is being paid. We can also then go to the receipts. Payments in the receipts is the same as the accounts receivable module. You can also new, open, adjust, reverse, and convert any. Okay. The receipts is quite similar, but instead of payments, it's just the receipt side. We can then open up and you can see that we have our two receipts that have been done via the bank manager. And then we could say that this account on top here is going to be going through this receipt and allocated off of this purchase invoice. So we're basically allocating these two together. We can record. You can then see that these two are taken off of one another. Obviously, it's minusing more than it is adding, but that was on my mistake on my side. But this is just to show you that when you do come back to this set receipt, you will be able to see that all the transactions or receipts or payments is allocated to this invoice. Okay. I just want to show you before anything else is sorted out. The mappings. We have mappings on the bank manager. This is to show or to make sure that the system is trying to allocate certain things. So we would set a mapping up, mapping name. So if we have to import a file that states that this is, let's say, Durban. So our OFC file or OFX file is Durban. And if the transaction type is a payment with a customer, and for this specific customer, we would then add a specific tax code and our priority on this said customer. So if anything comes through this customer, it will be looking for this customer in specific, add the comment to this customer, and adding a specific tax code and making sure that the priority of this customer is then set to number 1, 2, or 3, or so forth and so on. Okay. So if we have our mappings here, apologies, as this was only going to be working if I would import a file that has said name on it, the mapping name. So the file's name would be the Durban file, then this would then bring out all the information about this specific customer. Okay, so when it comes to the bank manager, there's not much to do besides importing all your information and then from there recording the information or adjusting if need be. And then from there, you can go into your cash book and change any information that's in here, or you can display any of the information that has been held within that specific account. The cash book is more for specifying a certain account, where as in if you go to your recon or your accounts payable for your payments or receipts over here, that is referring to all the accounts, and you would then have to click on those accounts and choose which one you would like to change or to do a receipt on. The cash book just mainly allows you to just choose the account straight away and be able to do all of it all in one screen. So this is more convenient than anything else. Okay. So I don't know if Indumiso had ever training. Unfortunately, I was only told to do the business training. And there's not much to know about Bank Manager. If you guys have any questions, please do so and ask. Are you referring to these types of receipts? So if you would open up a So the duplicate receipts, the message that was displayed when I said that it wasn't allocated correctly, it would then show a duplicate of it. But you can refer back to it and reverse any receipts if duplicates are then made. And for the process of allocating receipts to customer invoices, we can quickly do a invoice. So if we record this invoice, do it via the bank manager. Apologies on this ism. I don't know why it's not processing. Apologies on that ism. Yes, sorry, but you can see here that there's a receipt here for the set in for any the amounts that have come in. So you can see that the receipt here, and you want to allocate a certain amount. So you only want to allocate the 228 or the 228 that was for that invoice, and then you can then allocate these specific amounts. Okay. Apologies on this. So then from here, you can allocate your receipt that you did on the bank manager. If you go into the cash book and go to the receipts, you could then allocate these receipts, or you would auto allocate or auto match all the receipts that is here, depending on the receipt amount that you're looking for. And from here, you can just click on record. Okay, so the receipt, allocating a receipt to the customer invoices is basically going to the receipts. And if you have an invoice, a receipt that is done for this client, you can then allocate these receipts for it, or you would then create a receipt manually for it here. But in the bank manager or in the cash book, you do that like this, as I've shown you here in front. So if you go to the journal entry, and this is the total amount for said invoice. I think I must add the receipt to the invoice. Okay, so if invoices do need to be changed, you can reverse them. This has to be done. So if you would like to change your invoice, for example, so invoice number 5, if we go into the 5th invoice, you can see that there's a warning that tells us that if you have to adjust it, we'll have to reverse the entire receipt first. So you have to make sure that all receipts have been reversed if you would like to adjust the invoice. This is the only way that the invoice can be adjusted. So you can see a reverse all payments or documents that have an adjust on the transaction for journal number 21. So any receipts or deposits done for this will have to be reversed if adjustments want to be done. Okay, is there any other questions? Sorry about this of being such a, seems to be it's just a different training as I was prepared for today. Okay. If there's no other questions, then yeah, if you let me put in my email address. If there's maybe some questions I can get from Indomiso, if maybe there is some questions you'd like to ask for Indomiso as well, I can put in my email address for you guys here. So if you wanted to ask Indomiso any questions or things like that, you can email me. I can then maybe get some answers from him and then get back to you as soon as possible with that. Okay. Well then, well, the participants, then I hope everybody has a good rest of their day and drive home safe from work if you guys are working. Yeah, enjoy the rest of your day, everybody, and see you for tomorrow's training.